Welcome to A Canadian Investing in the U.S., a podcast and YouTube channel focused on Canadians buying real estate with host Glen Sutherland.
Welcome to a new episode of A Canadian Investing in the U.S. with Glen Sutherland. This week, my guest is Paul Hopkins. Paul, you want to just start off by introducing yourself to everyone?
Yeah, sure thing. So I'm Paul Hopkins. I'm actually a dual citizen. So I was born and raised in Denver, Colorado, and I got transferred to Canada over 20 years ago for work. My background is construction and engineering, and so I got transferred here for work and worked on basically, large infrastructure projects focused on bridges all across North America. And so I basically worked my way up over 20 years and in construction and in engineering and operations. And so, I've always been involved with construction. I've been passionate about construction since a young age, but also in real estate at a young age. So I started working basically in my parents' fix and flips at the age of 12. And so kind of understanding construction, also understanding real estate. And I took that passion, with me wherever I went. I was always doing my own fix and flips, basically living in the mess that I was creating. And I got to a point where I was, obviously exhausted from working full time during the day and then coming home and doing my own flips at night. And then started learning more about hiring out, doing more of that type of work. But kind of fast forward a little bit, I got to a point where I learned about apartment investing, and this was about 2015 that I learned about apartment investing because I found a group that was looking for basically a project manager to help them renovate a completely vacant apartment building in Dayton, Ohio. And it was 315 units. So I came on the team, took the reins as far as like how we're going to do the renovations, learned a lot during that time. It was a completely kind of new role for me in a way, but a lot of the fundamentals that I learned in my past with engineering and operations, we're carrying forward to what I was doing with that company. But I also learned, more about the equity side and about capital raising and syndication, and the whole big world about apartment investing. And so from there, I was able to grow the company. I basically was leading the acquisition and asset management department. We were buying assets in Phoenix and Denver and Ohio, down even into Puerto Rico, and managing a lot of it from basically my home office. And so we were very disciplined in what we were doing and what we were looking for. We were evaluating hundreds of deals, and finally got the one in St. Pete. And then it took us at least another year to get another property under contract. And that one actually happened to be a build for rent development project in San Antonio, which is, it's an alignment with, a lot of my background in construction. But it was also with a partner that we had developed a relationship with because we saw also what was happening in Tampa, that it was so slow and we just couldn't be sustainable only focused on Tampa. So we expanded our footprint to look at other markets and did our research, and we landed on San Antonio. And so we started expanding there, and then it just kind of evolved. And now we're, currently in Dallas. But yeah, so that's a quick background on me, and my role here at CPI is VP of investments. I'm overseeing all the acquisitions and asset management on our portfolio. So currently we have our 136 unit apartment in Tampa. We've got two build for rent development projects in San Antonio. We've got this new property, Atlas at Louisville, which is in located in Dallas Fort Worth area, and we're also looking at another build for rent project in Denton, just north Dallas. So continuing to evolve and grow, but yeah, still sticking to the fundamentals, and because of my engineering background, having that risk adverse type of view in the world, but also very analytical when it comes to evaluating deals. I basically always say, do the numbers, and the numbers will tell you what to do. So take a lot of emotion out of what we do, because it's treated as a business, and just reviewing the numbers and making it all make sense. So.
You know what? That transitions really nicely because what I wanted to talk about on this podcast, because I'm working with CPI as well on this project, and I wanted this to be educational on the area, the neighborhoods, what we're doing in the Dallas area. And I thought, honestly, I haven't done enough spotlights on markets. And so where I want to go with this is I want to get into, why Texas, why Dallas, why even Louisville? Like, what are we looking at? What's around here? And because I think anytime I'm doing these sort of discussions, if we have a sample property as, a sample, then it gives us a little bit of a direction of why this area, what we're trying to do, and what specifically we're doing, rather than just doing a general spotlight on a market. And I think we can tie this all back to the property, but still keep this educational. So anyone who's, interested in this property, they can speak to us. And if they're not interested in this at all, that's completely fine too. And I want to bring some education to this so that they understand what's so great about Texas, why we're doing this. And if you are interested to get information on this deal, just go to glensutherland.com/DFW for Dallas Fort Worth. Also, if you are interested in just getting a list of every deal I'm working on, just go to glensutherland.com/deal alert.
This is straight out of our presentation on our current deal that we have under contract called Atlas in Louisville. And Louisville is located in the Dallas-Fort Worth area. But, just generally, why do we choose Texas? Texas, to begin with, it's massive. It is basically the 8th largest economy in the world. You've got a multitude of Fortune 500 companies that are there. You've got all the infrastructure that you want an economy to have. You got airports, highways, railroads, coastlines, seaports. So it's a behemoth in its own way. Yeah, and I've got some more slides that kind of get more of a closer look into the actual market in Louisville and what's around there. But this slide here basically says a lot about, where is the population, where is it declining and where is it growing, and where are people moving to? And so U-Haul does basically this annual survey, or at least study, and they list out the top states for growth and the top metros for growth. And last year in 2025, Texas was number one for inbound migration. And when you look at the metros, Dallas is number one. But you also have Dallas, Houston, and Austin, which are the top three for the metros that have the greatest in migration using U-Haul. So that's just a great indicator as to people that are moving to this area. Now let's talk more about the Dallas-Fort Worth area. Dallas is massive. You got 8.5 million population with basically 4.3 million of employment there. And Dallas is projected to grow by 8% up to 2030. So, that's, you already got 8.5 million people and you're growing at 8%. That's a huge amount of people that are moving into this market. And Dallas recognizes that. They're expanding the airports, they're expanding the highways, they're improving the infrastructure, they're making investments into their own city just to sustain the amount of growth in people that are moving there. When you got companies that are there, they're drawing people to be in these locations.
And I know from even my own research, some of it's been with land deals and tax deals that they've coerced a lot of major companies to come out of other states because they want the business.
Yeah.
Are you looking to invest in the US? Are you looking for a coaching program that will actually save you money and help you avoid mistakes? My students get discounts on lawyers, attorneys. If you're looking to get an E2 visa, if you're looking for certain software, if you're looking to even speak with CPAs, I have discounts for all these things. If you want to just get on a quick phone call and we can discuss if it's a fit for you, 10-minute phone call, go to glensutherland.com or at CanadianInvestingInTheUSA.com and book a call.
Exactly. Now, one thing that has been on other people's minds is, DFW had a huge uh, growth in its pipeline. So there was definitely almost an oversupply of new apartments. And so, when you kind of look at the headlines and you look at other syndicators that are out there, unfortunately, a lot of the deals that have been purchased over the last couple of years are in some type of financial distress. And there was basically a boom that happened in DFW. Interest rates were low. People come in buying all and building all these new apartment buildings, but also buying apartment buildings, with high octane bridge debt on short term type of term limit with floating rates. And it's created a lot of issues. And so, like, when you do read the headlines in Dallas, there's I'm very aware of it. And other investors are very aware and a little standoffish as to like the recent performance in DFW. So I want to kind of address that head on. That so that was a concern of ours as well. And looking at you know are we entering into this market at the right time, or do we need to kind of let things cool off? And based on our research, we feel like now is the right time. When you look at basically like a clock, and like when is the best time to enter into a market, like 12 o'clock being the peak of the wave, and 6 o'clock being the best time to enter into a market. Um, you want to enter into a market anywhere between 5 o'clock and 7 o'clock.
Yeah.
And we feel that we're currently around 6 o'clock right now to enter into the market. And the reason being is because the supply wave is already passed, and I'll get to that here in a second. Concessions have basically started to drop. You've got rent growth that is now starting to happen within these different markets. So like, and I've got the data here that kind of showcases why now might be the best time to get into DFW, whereas before it was definitely rocky, and there was definitely reasons why. So
If I wanted to like just expand on that a little bit, the
sure,
concessions that he's referring to is a lot of times when there's a market that has a lot of supply, what you typically are going to see is, first month's free or 15% off, or, some sort of perk in order to get you into the building. And when you
yep,
see that, and then you see that go away, it's a good sign that the place is, that the market's recovering in that area. The other thing that you were talking about is the financing of the syndicators and other people who were buying at the top of the market. And what we saw, not necessarily only in DFW, but across the US, was that people
yes,
were buying bridge financing, so shorter term loans, and they weren't buying rate caps. And they got
right,
themselves into trouble when interest rates went up, that their underwriting wasn't accurate, and they were now expecting to refi at a specific rate, and now that wasn't an option. And what it does is it puts a lot of pressure on the entire project, because we're not talking about a single family house. We're talking about a massive building, and a interest rate change can really affect just how you actually can run these buildings, and it gets people into trouble. Some of these syndicators that bought at the top of the market, and it creates an opportunity for people coming in at this period in the market.
absolutely. And that's exactly how we got this deal under contract in Louisville. Is the current owner had bought this property in 2022. They put bridge debt on it, and they've basically already had to extend the term on their existing debt. But they got to a point where they were no longer able to either buy another rate cap or meet the debt obligations, and so the seller is being forced to sell by the lender. So that they were at a high basis, about 192 a door, and we're coming in at 153 a door. Exactly. Yeah. It's so like, yeah, let me get into some
Yeah,
overall
sorry, I might be
statistics.
jumping a little ahead of your
No,
presentation.
no, yeah, this is a great conversation. But like, some hard facts here. So, you know, the peak of deliveries in DFW, 44,000 units that were delivered in 2024, basically at an all-time high. And you're looking at basically a 65% reduction from 2024 to 2027. So that's a huge drop. And what's been happening. So there's a gap now And what does that gap really do to other forecasts? And then one other point that I just at least wanted to make here is, our property, for example, it's a Class B property. And so when you look at development, usually development is focused on Class A. And where is their land available? Typically land is only available on the outer limits of the city. And so they're starting to expand and build out into those different markets. But like when you're more concentrated in like the local, center business district or the core of a city, there's not much infill product for new apartments and deliveries. So that's why we look for a Class B, because Class B, you do have that value add component that you can do to it, but it's also a conduit. So when the economy is good, people move from Class C through Class B and into Class A. And usually when the economy is bad, people move from Class A down into Class B. So there's always a demand for B, no matter which way the economy is going. So that's another point that I at least wanted to highlight here, where even all the development that's happening is happening on the outskirts, away from where this property is particularly located. So,
if you're a Canadian interested in U.S. real estate, there's a 60-second quiz that will tell you the safest strategy based on your specific situation. Because here's the thing, there isn't one way to invest in the U.S. as a Canadian. The right move depends on your budget, your risk tolerance, and what you actually want to get out of this. Most Canadians I talk to are stuck in the same spot. They know the U.S. opportunity is real, they've done some research, but they're sitting on cash because they don't want to guess their way through setting up corporate structures, cross-border taxes, and picking the wrong market for the first deal. The mistake isn't lack of information, it's that generic U.S. investing advice doesn't account for your situation as a Canadian. It doesn't account for your capital, your timeline, and your appetite to be hands-off or hands-on. So we built a 60-second quiz that gives you a personalized answer. Which U.S. investment strategy fits you right, whether you're actually ready to buy or what to fix first, and the smartest next step based on where you're at. It's free, it takes about a minute, and you'll get a customized game plan at the end. And it's not a generic PDF. Go to CanadianInvestingInTheUSA.com/quiz. It's also linked in the show notes. Take the quiz, get your game plan, stop guessing. You don't need to figure this out alone. You just need to know what your next move is.
Yeah, no, I agree. I do enjoy the Class B. The Class A is typically, cosmetically, they typically look very similar. Just the Class A is brand new. And then the
right.
Class C just sometimes get, just not as nice of a product, or it's a little older, where it kind of falls into. Class B is kind of the sweet spot.
Exactly. Yeah. Yeah. And so, I'll just talk a couple more seconds here, I guess, on just overall the submarket that we're looking at, which is called the Louisville Flower Mound submarket in DFW, and where this property is located. Yeah, so definitely lots happening right in this particular submarket.
Yeah.
So that's pretty much it from a high level on DFW, why we choose DFW, and why we're excited about this particular investment, because it is basically, we feel, the right time to get into a market. There, as the old saying goes, there's blood on the streets, so it's unfortunate, and I feel very empathetic to what's happened with a lot of the investors. A lot of investors that we talked to were, they had a lot of capital wiped out. Fortunately, I haven't been in that situation myself, but see what has happened over the last couple of years, being very disciplined on what we look for and the markets that we enter into, and the timing that we get into these markets. So.
I love the growth. I love that it's so close to the interstate. I love that it's so close to the airport, close by Amazon and all these great businesses around it. It's just a spot where people want to be, which I think is honestly where you should be too. This is brand new, but I'm creating a deal alert email letter for people. So if you are interested in just getting updates on the deals that I'm working on, or Paul's working on, I'll send those as well. But glensutherland.com/deal alert and you can get on a list. That deal alert will have single family houses. It will have the large apartment stuff. It'll have a lot of opportunities to invest in, an opportunity to even just get on the phone with me to discuss what there is on this deal. Specifically, if you're interested in this deal, I made another link, but both will work. glensutherland.com/DFW, which will just be talking about these specific deals we're doing with CPI for this Dallas area. But I think there's a lot of opportunity if you want to even just learn from what we're doing, or you even you're interested in it. I'd love to just have a conversation to see, just to help educate you on what's going on in the area. Paul, I really appreciate you coming on the show. There's a ton of information in there, So thank you so much.
Yeah, absolutely. Happy to help.
That was a nice video. Bye.